Investors, we're about to discover 3 of the best dividend stocks to buy right now, all trading under $100 per share. Meaning, if you're on a budget or simply don't have a Buffett-like bank account, you can still invest with total confidence. And best yet, all 3 of these companies are industry leaders that have been shelling out dividends for years, meaning share price appreciation and dividends coming your way. But the clock's ticking, so let's dive right in. So it's not that I would ever recommend just investing into a stock simply because you can afford it given its share price. I mean, after all, we aren't talking about a new pair of shoes, a new pair of Levi's jeans, or a date with your girlfriend, all of which I desperately need right now. We are talking about getting invested into a business, and that's to say owning just one share, you would then technically be a business owner. And the real question is, if you had the opportunity to do just that, wouldn't you want to own a quality business? At least I would. However, right now we do have 3 insanely high quality companies that are trading for underneath $100 per share, and I want all of them on your radar. So we're gonna get started here with the least expensive according to its share price, yet it's an absolute powerhouse when it comes to profitability and dividends for shareholders, and it's none other than Realty Income, ticker symbol O, which has established itself as the leading net lease solutions real estate investment trust in the industry, with a vast portfolio that spans across the United States and with an international presence as well. Now, in terms of its portfolio, over 13,000 properties with over 1,300 clients to fill them, allowing for plenty of diversification and protection, both in market tailwinds and headwinds. Now, as of this video, Realty Income's trading for $53.73, which is down by about 12% year to date, but have a look at this 5-year track record with gains over 21%. Now, we can also discover some insider activity here when it comes to Realty Income and smart money moves being made into the REIT. But we also find even more confidence when it comes to the analysts, with over 26% worth of upside expected, coming to a share price of $68.10. But now, as dividend investors, let's get to some of these dividend insights. We have 25 plus years worth of dividend growth at a rate of 3.71%, with a dividend yield rewarding investors at 5.72%. Now, investors, that's just 1 out of the 3 here, but before we go any further, let me know if this video and the content within this video is something that you're enjoying and finding value in. That's all you have to do is tap on that thumbs up button for me. It would greatly be appreciated, and then more content like this would come your way. Now let's get back to it with a healthcare gem I think we should be all over, Bristol Myers Squibb, ticker symbol BMY, which is often dubbed as the world's largest pharmaceutical company, and certainly then one of the largest companies in the United States. So let's talk about too big to fail. But wait, it looks like it's actually failing, as it's trading for $58 per share, which is literally less than a pair of Vans that I'm eyeing down. And how could that be? Well, let's get a little macro here with the insights, because that certainly plays a role. But zooming out, we can see that Bristol Myers is actually up 10% over the course of the last 5 years, which is now where we can say that slow and steady really does win the race, especially with the PE ratio at 15.7 and plenty of insiders who've been buying up shares of Bristol Myers. But now check this out. It's smart money with the biggest money moves coming in, with over 557,000 shares purchased last quarter. Now, as for analysts, a target share price of $68.67 per share, that's expected, and that's over 17.2% worth of upside. But here's where it gets beautiful as a dividend investor, as Bristol Myers has been growing its dividend for 6 consecutive years now at a growth rate of 7.19% for the last 5 years, all making for a 3.89% dividend yield. Next up, Omnicom, ticker symbol OMC, which somehow always flies under the radar for us dividend investors, which I find to be quite ridiculous because it is arguably one of the most reliable companies out there, with the moat that it has built for itself. I mean, this is the global media marketing and communications company with over 5,000 clients that operate in over 100 countries. And I'm going to go ahead and guarantee that you've seen their work when it comes to some of the brands that they market for, whether it's Pepsi, Pfizer, Nissan, DraftKings, heck, even the Boy Scouts of America have chosen to be Omni partners. Now, as of this video, Omnicom has slid by about 4.7% on the year, which has then triggered the drop in the PE to 11.4. But I do want you to focus on the longer term here. Literally, become an Omni partner. You see, over the last 5 years, investing into Omnicom would have meant 30.22% worth of appreciation. But given the nature of the business and our next 3 to 4 months worth of uncertainty, I don't want to mislead you. Omnicom may falter some more, which is likely why we've seen some insider selling going on, and moreover, less activity when it comes to smart money investing into Omnicom. However, for those investing for say the next 2 to 5 to 10 years, that won't matter much, especially when you're going to be collecting on Omnicom's dividends. Check this out. This advertising behemoth, though not as consistent with its dividend track record, well, we do have a growth rate here of 3.57%, which is pretty healthy, and a 38.73% payout ratio with a reliable dividend at 3.62%. So how about it? 3 stocks under $100 paying dividends. Let me know your thoughts in the comments down below, and of course, catch the next video right here. I'm sure you'll enjoy it. Now, also tap on that thumbs up button and subscribe to never miss a single video.